Hello everyone. I'm going to show you how to trade simple order blocks. This works on anything. It can be NAS 100, USDT, gold, currency pairs, anything. The market moves the same. You just have to know what you need to do when what I'll show you happens, right? So before we get started, uh, let me just show you an example of how the market moves. For example, if you are in an uptrend, right? We expect something like this, something like that. When we're in an uptrend, something like this. So you would see that you can just draw your trend line like that, right? So what I'm going to show you is that I'll show you when to enter the market as soon as it changes direction, and it has changed direction just after it broke the down trend line at that point, right? So I'll show you the safest way to enter the trade. Same way if it's in a downtrend, if it's doing like that, and then sorry, you draw your trend line like that. So let's say it does that, right? So it has broken the upper trend line around that area. So I'll show you the safest way to enter using simple order blocks. So I'll give you an example on USDT. I'll give an example on USDT. I'll also give an example on NAS 100, right? So let me give an example. Uh, let's look at this area. So you can see here that the market at this point, it was in an uptrend, right? You just draw your a trend line like that. So we want to know how to catch this move, right? So we're also going to use use the MACD. The MACD here is going to help us spot those entries. So what we need to look at is that we in an uptrend, we have to spot the last high low, right? So the last high low before it broke down, the last high low is this one. So we're going to mark it. That's the last high low there. So this last high low here, it's valid because if you look at there and also look at the material, it's in red. But if this was like that, but here it was in green, it was not going to be a valid high low. For example, this one here is not a valid high low. If it's like that, and then it's green here on the MACD, it's not a valid high low. So it has to, it has to show red here for it to be a valid high low. So now you can just try to zoom in. You can just try to zoom in. And show you something. So this was their last high low before it got broken here, right? So this was the change of direction. First it broke the trend line, and then it broke our last high low. That means we're expecting the market to make a new low, lower low, right? So we're going to mark an area of liquidity before around this area there, before our high low got broken. So that is our area of liquidity. So every time this gets broken out, we expect the market to go back there, grab some liquidity, and then move downwards, right? So now for us to enter using a simple order block, since we're in an uptrend, right, we are going to look for the last green candle. In an uptrend, the green candle means they represent that the market is going up in an uptrend, and the downtrend is the red candles that show us that the market is going down, right? So we're going to mark our last green candle. So this was there before we broke our high low here. The previous green candle before we broke our high low is this one here, right? So we are going to mark it like that. I hope you can see. So we are just going to mark the body and not its wicks, just the body, the last green candle in an uptrend, just after the high low got broken here. Then when we mark that one, we wait for the market to come back in that area, and then that's where we are going to start selling. That is after it broke out. We're not going to rush into selling. We're going to wait for the market to come in that area. So if you're going to sell there, you're going to start selling there, your stop loss is just going to be above where the liquidity area is, right? Just there. And then for the take profit, it is just up to you. For the take profit, it is just up to you. When you're happy with your profit, you can take it. You see, especially if you're trading US30 or NAS 100, it's not everyone who has it in themselves to hold such trades all the way up to here. You see, when you see massive profits, you're going to panic. You're going to panic and all. But as long as what I can just say, as long as you sold here, you put your stop loss there, immediately the market goes in your direction, right? Immediately it goes in your direction. Always put your stop loss at break even, so that even if it reverses, you don't lose anything, right? You don't lose anything at all. So here, look at that risk, just a small amount of risk, and then you can grab all that. It depends. Others can grab it all the way up to down there. Maybe you can just close somewhere there. It's still enough for you. It's still enough. It just depends the psychology. It depends the psychology and just how you are as a trader. Others can't hold trades longer. Others can hold trades longer. It's just up to you. But with time, as you keep on trading, you get used to it, getting trades longer without panicking, and that's how you win, by letting your winners run and cutting losses short. So as long as you got that entry, whenever you go into profit, bring your stop loss to break even. So that's how you catch that move. That's how you catch that move. As you can see there. That's how you do it. That's how you do it. So okay, let me show you in a downtrend. Let me show you another example. Let's say in a downtrend, how we could have. I'm going to remove that just so we can have it. I'm also going to remove that. Yeah. So if we were in a downtrend, right? Just an example. You're going to mark a trend line like that. You're going to mark a trend line like that. Yeah. So anyway, excuse my trend line, guys. It's not that smooth. Anyway, what we are waiting for is change of direction, right? So we're waiting for change of direction. So in a downtrend, the change of direction is when it breaks, it breaks our trend line. That's the first row. The second row is whenever it breaks our previous lower high, right? So our previous lower high, I'm going to mark this one here. So we can start from there. The market started from there, right? So our lower high was there, our lower low was there, and then we have this one here, or we have this one here. It make a new lower low. Then we have this one. It didn't break this part. So this for me, as long as we did not make any new lower low, this for me still plays as, or stands as a previous lower high, right? See how it's been respected. It hasn't yet been broken until around that area, right? So even after the market breaks the trend line, we're not going to rush into looking for entries because it did not break our lower high. Market has just been going there. It failed to make it failed to break that area there. Same here, it failed until around this point, right? So what I can just say, because the market here has been ranging. So for me, this area I would just consider it as an area of liquidity. Or this area the market is just ranging. There's no proper direction. It's just ranging. This is just an area of liquidity. So after we make our area of liquidity, we are going to, since it broke out from there, let me just, before you continue, guys, I'd like to thank you for watching this video, and also remind you that please subscribe to my channel and like the content. I would really appreciate it a lot. Don't forget to share the videos with others also, and please follow my Instagram page, where we also share some contents, and we also like for mentorship. So if you want mentorship, you can just contact me. And also kindly follow my Telegram page. We share a lot of free stuffs there that you pay to other mentors. We give it for free to you. If you want something, just DM me and I'll look for that thing for you. Yeah, so this is the area where it broke out, and then we look for the last red candlestick, right? The last red candlestick. Remember, guys, in an uptrend, we always look for the last green candlestick. In a downtrend like this one, we're going to look for the last red candlestick. So we're going to mark its area. We're going to mark its area like that. Just the body. So if I can zoom in, so this is the area where we're going to be looking for our buys, right? So now let me show you. You can buy just in that area where they make sure always to minimize your risk, and then you can hold as much as you can. That's just up to you how strong your heart is. You can hold as much as you can. So yeah guys, this is it. It's very easy to wait for this kind of setup. Just have to know what you're looking for, and then you have to be patient. And then when it happens, when you see something like this, you place your limits in that area. This is just your simple order block. Place your limits in that area. It will get triggered. Just minimize always minimize your take profit. I mean your stop loss. And then whenever it goes into your direction like that, you move your stop loss to break even, so that even if it reverses, you won't lose anything. Let's go to NASA. I also show you something. Okay. Okay. I hope you guys have watched the video for the stupid line. If you watched, and if you've been practicing stupid line, you could have gotten this sale here. Anyway, we're not talking about stupid line in this video. Let's continue with our simple order block. You can just look at this one also. So this is an uptrend. You draw a trend line. You draw a trend line. Let me just delete this. You draw a trend line, and then you figure out your last high low, right? So the last high low we have here is this one. So you mark a line there, and then you can just try to zoom in. You see what happens there. So this area you mark it as an area of liquidity. So just after it broke, this is where we got the breakout of our higher low. We got this break, and then after we get this break, we don't rush to start selling. We wait, right? We wait for us to grab that perfect entry with our simple order block. So now we look for the last green candle, because it's an uptrend. We look for our last green candle before we bought this breakout, which is this one. We mark it. We mark it. After we mark it, you place your limits there. You place your sell limits in that area. You check. So after you mark this, after you mark this, you sell. You place your sell. You place your sales there. You just check. You just go triggered, and then you stop loss just above the liquidity area, just there. Guys, as I keep saying, as for the take profit, it's just up to you. It is just up to you. It's just up to you. So look at the risk there. Very small risk, and then you grab this whole move. You grab the whole lot of that move. You check, guys. So it's okay. It's okay even if you're only able to hold your trades up to there. This is still profit. When you get these ones each day, at the end of the week, at the end of the month, you're still going to grow your account. Don't always hold until there. If your heart doesn't allow you, don't force things. You have stress, you panic. You see the profit nice will give you, even with 0.02 or 0.03, 0.05, you hold all the way up to there, you will panic. So these things take time. Let me see if I can spot another example. And I'm always getting these kind of entries on a 15 minutes time frame. You can try any other time frame. You can try another time frame. Yeah, you can make another example also on this one. So it's an uptrend. Draw a trend line. after you draw your trend line. So guys, I'll show you another example. This is another one here. We mark from here, we mark there. So this is where we got that breakout happened here, and then the last green candle is here, right? We mark it. So we mark it like that, right? So broke out, then it went back into our order block, right? So we sell here, and then you have that, and then you grab that. Just try to reduce your risk. Always reduce your risk, guys. So this is how you trade simple order block, guys. This is how you trade simple order blocks. This is how you always trade simple order blocks. Always make sure that you have your MACD. The MACD will always help you to see a valid high lows or lower highs. You can always see that it has to be in the same area. It has to be red on the MACD when you want to determine which one is a valid high low or a low high. Low high, it has to be green on the MACD. So this is it, guys. Thank you for watching. See you next time.